Welcome back. A lot to unpack on this week's episode, especially talking about headline inflation in Canada. Stats Canada releasing its data coming in at 2.8% for the month of February. Now, what does this mean for the Bank of Canada? Does it give it the ammunition to talk about policy rate cuts in 2024, or will it wait for the US to cut rates first, especially with a resilient, robust US economy? Let's unpack those thoughts and opinions on this week's episode. We welcome you back to the channel. It is Friday, Finance Fridays, and I am your host, Anthony with In Touch Mortgage Solutions. And if you're new to the channel, we invite you to subscribe, hit that notification bell so you're notified every time we post a new video, as well as don't forget to leave your thoughts and questions in the comment section below, and we'll do our best to address those on a future episode. But now let's get right into those CPI numbers. Now, as we look at the CPI headline inflation print, it's important to understand that we saw it come in at 2.9% in January, down to 2.8% in February. Many economists have predicted that that was actually going to go up, and we talked about it last week. We thought for sure with the higher prices in fuel and other components that that number was going to tick up, and it ended up ticking down. So that's really good news. We're happy to be wrong. When inflation pulls back, this means that we could be seeing a new conversation evolving with the Bank of Canada in the coming weeks as we wait for the April 6th policy rate announcement. I do think that the Bank of Canada will still hold in April. I don't think we're going to see a cut just yet, but that does increase the probability of a rate cut in the June announcement. That's where many economists believe that things will start to change or turn over. Now, ultimately, things that pushed inflation down were things like cell phone data plans, the cost, savings there, some internet cost providers dropping prices, so that helped inflation as well, easing in some of these food prices as well as clothing and other sectors such as some of the service sectors. So we're starting to see things pull back a little bit. We're starting to see some of these paces of increases not as impactful or not as high as we saw in the past, which brings up the question if we are in a deflationary period or in a disinflationary period. And we'd like to hear from you, our viewers, what type of economy, what type of market are we in now? And ultimately, these are some of the conversation points that are evolving now as we see the Canadian economy push forward. We're seeing a lot of the pressures, right? What are these pressures that we're talking about? Well, we definitely know that unemployment is starting to tick back up. Yes, we have higher population growth, but less jobs being created to accommodate all these new to Canada individuals, which is problematic as it can camouflage or skew the numbers when it looks at GDP and GDP per capita.
And then there's economic growth. We have had the worst economic growth per person in the G7, the worst. In fact, our GDP per person, our income per person in Canada is lower than it was 5 years ago. That has not happened since the Great Depression, to put it into context.
We have obviously mortgage delinquencies ticking up in provinces like Ontario and nationally. And although there is a significant uptick in some of these hotter housing markets, globally or across the entire country from coast to coast, we're still seeing these mortgage delinquencies tick up, but not at the historical highs that we've seen in the past. So,
we've seen a little bit of pressure on mortgage delinquencies, but really, honestly, those mortgage delinquencies remain exceptionally low in Canada. Now, a little bit under upper pressure. No, we do expect that those delinquency rates will rise simply because starting point is so exceptionally low.
We'll keep an eye on that, as well as keeping an eye on what's happening with the debt crisis here in Canada. Obviously, consumer spending. We definitely have mortgage affordability or housing affordability at the worst we've ever seen. And this is problematic for many Canadians as things like mortgage interest costs and rents skyrocket for Canadians. And this is ultimately something that's keeping that CPI inflation number closer to the 3% mark for now, as we see this push and pull sort of happening with these inflation numbers, which is what the Bank of Canada is referring to when they're talking about inflation remaining sticky for the better part of 2024 and into 2025. So we'll see how these numbers play out. In a nutshell, the Canadian economy not faring too well in comparison to the US. So this is a very important dynamic, because as the Canadian economy potentially needs a rate cut to sort of bring back some resilience into the economy, sort of bring those prices down to kickstart our Canadian economy, bring up that growth, the US is facing another set of challenges. And this is important because if we look at the US CPI inflation or headline inflation in the US, came in at 3.2, higher than expected. So this was supposed to come in at less than 3.1, but it came in at 3.2 just last week. We talked about it in last week's episode. This is not good. We also heard from Jerome Powell, the head of the US Federal Reserve, the chair, talking this week on Wednesday about holding its policy rate steady. So they got their rate announcement for their Fed's fund rate. And ultimately, yes, the US economy is still seeing a little bit of robust spending. Consumer spending is pulling back, but still a lot higher than expected. And what does this do for the US economy? Well, it can definitely push out the probability of a rate cut. Now, although there's still conversations around 3 potential rate cuts happening in the US, my question is if the US economy doesn't pull back, if inflation doesn't pull back, get that inflation target back down to 2%, exactly what we have here in Canada, then there's going to be no reason for the US to have to cut rates. And this is where that conversation sort of, becomes disjointed in the sense of what will Canada do if the US doesn't cut rates in 2024? Will they go ahead and move and cut rates ahead of the US, basically widening the gap between the Fed's fund rate and the Canadian overnight lending rate, the policy rate? And this is where that disconnect happens. I don't think the Canadian economy personally will cut. I don't think the Bank of Canada will cut ahead of the US, because that will just be importing inflation as we see the Canadian dollar continue to weaken against the greenback, against the world currency, the world reserve currency, the US, and the US mammoth of an economy. I don't think they're going to do that, because that would basically be problematic to the Canadian economy, as we would import that inflation from paying more in that exchange. And ultimately, I don't really know if we're going to see the Canadian Bank of Canada, or I should say the central bank here, sort of make that move ahead of the US. But ultimately, what we need to do is monitor the data, especially for those who are asking the question, what's going to happen? Bank of Canada is going to cut rates at some point. I do agree the US and the Canadian Bank of Canada will have to, at some point, cut rates. But ultimately, how many rate cuts are we going to see, and how impactful are those rate cuts going to be? Are we going to see 0.25%, 0.5%, 75 basis points by the end of the year or into 2025? And I really think right now the conversation should be the holding pattern. I think the US and Canada holding, making sure that inflationary pressures are completely dead, something we've talked about ad nauseum, but really important. They don't want to repeat the late 70s and early 80s. So as the US held this week, we're going to see what happens in April with the Bank of Canada. We're going to keep a close eye on that data to help formulate opinions on what to do next, as more and more Canadians looking to front load the market ahead of any possible rate cut. We'll see exactly how it happens, but make sure to subscribe to the channel. We'll be talking about that and more, but let us know when you think the Bank of Canada is going to cut. You think it's going to cut in June, or you think it's going to cut in July? Let us know in the comment sections below, but we'll see you next time. Thanks again for watching. We'll see you next week.